One more day, guys. One more day. What could it be? The interest rate cut. Look at the altcoin season. Look at it. We're at 71. Average crypto RSI 44. The market cap is at 4 trillion. Bitcoin sitting at 115. And you know our favorite dog is sitting at 1011. It's about to go down.
5%, 10 on every car that I own. Put the striker in track mode while I listen to Bone. Black on black 45, need another in chrome. If I don't hit you, then my bitch will want you walking my home. First flight to Jamaica, next one to Bahamas. I'm gonna win no matter what. God made me a promise. Just bought so much Dogelon that I just added 2 commas. I tell my son believe in himself and respect his mama. Make sure you get to your money, invest in yourself, and go follow your dreams. Daddy ain't who.
All right, guys. Oh my God. Could this be the time that we have been waiting for? Are we finally going to, become eagerly wealthy? It's all about the cards that you play. It's all about what you do and how you run your bags. Now, again, I know a lot of people have not dealt with millions. I know a lot of people have not understood the potential that can happen once we become successfully wealthy. And I just want to eagerly, let you guys know, like, man, like, you guys have been in, I can't even explain it. Like, I don't want to say, man, like, just congratulations. Let me go ahead and play this. This is how we are really waiting.
Good afternoon.
We playing them ass games, we are ready. We are ready. Let me know in the comment section that you guys are ready. I know your heart been beating. You know what I'm saying? I know a lot of people on the screen right now, but at the end of the day, we have to stay bullish no matter the weather. We could weather any storm. Now, Dogelon Mars is primed up. You know, when I'm gonna try to see if I could put into a certain example. When we had that first interest rate cut, shout out to Big Hot. He also put that in my ear. We had that first interest rate cut back in 2024. I believe it was in February. Let me see. Interest rate cut 2024. Let's see. Let's have the I want to be direct with this here. Definitely hold up for a second. When did we had an interest rate cut? So we had an interest rate cut. I thought it was February. I really thought it was February. Increase to U.S. federal. So it was in September, a half basis point. This was in September. Now, if we go over here, let's go to Dogelon Mars right quick. September of last year. Because we shot up. We shot up. I want to I don't know if anybody has this, but We shot up September. We're sitting at the 12s. So in November, we shot up to 22.85 after the interest rate cut. But I believe in February, let's go to February. This is January. Bitcoin halving was in April, I believe. It's March. So in March, we shot up to high 31.96. And in March again, the 29th, we shot up to 35.48. But if we go to Coinbase, let's check this out right quick. Let's check this out. We're going to do this. We're going to do Dogelon mines. Wormhole is huge too. Don't play those games. All right. Share this tab. Wow. We have been spiking. On yesterday, we shot up to 6017. And we've been having these spikes lately. Went up to 65%. Click on all. Would this show? Let's see. No. Wait, hold up. That was a 9. That's 2022. This is when we were falling. Ooh. That's when we were falling 2024. March 11th, we're at 4 zeros, 6 zeros, 4,000. It seemed like none of the data is showing that when we had shot up to 606. Others say 607. Okay. I wanted to. Well, the point is this, family. Get ready. I'm gonna play this clip, and it's a little long clip, but there's a lot of useful information in here. Pay attention. Stay locked in. Anthony Pagliano, he's gonna talk his shit.
All right, ladies and gentlemen, things are about to get very crazy across financial markets. Now, I know there are plenty of people that are still predicting a recession is right around the corner, but they're simply wrong. I don't know what these people are talking about. I'm not sure if they're looking at bad data, if they're drawing bad conclusions from good data, or there's some combination of the two. But it doesn't really matter how they're arriving at the wrong conclusion. They're just flat out wrong. Take the US stock market as one data point. Adam Kobisi writes that the stock market is incredibly hot. I don't disagree with him. Since 1975, there have only been 6 times where the S&P 500 rose 30% or more in 5 months. 2025 is one of those times. In 100% of these cases, the S&P 500 has ended higher in the following 6 and 12 months per Carson Research. In fact, during such occurrences, the S&P 500 has rallied by an average of 18% in the following 12 months. That's pretty good. Those are insane numbers. So you want to bet against history? Be my guest. I like to think of financial markets similar to science, though. Things in motion tend to stay in motion, and momentum is one powerful force. But this is where things get interesting. If the stock market is growing by 30% in 5 months, there's got to be someone who's getting richer, right? Who the heck is holding all this stock? Well, Adam goes on to explain that newly released data shows that U.S. household net worth jumped by $7 trillion in Q2 of this year alone. In other words, for 3 straight months, U.S. households added an average of $79 billion in net worth every day. As a result, the rich are getting much richer. Now, currently, the bottom 50% of U.S. households, they hold just 2.5% of total U.S. wealth. In fact, the top 1% now holds $40 trillion more wealth than the bottom 50% combined. So let's just recap this situation for a second. The stock market just drove historic returns over the last 5 months. It made rich people even richer, while the bottom 50% of Americans were left sitting on the sidelines. Now, that isn't the rich people's fault. It's a financial education problem. Stop blaming the rich people. In fact, I would argue that we have a national crisis in this country until we figure out how the heck do we educate every student on personal finance and investing. Educate them and they can get rich too. Asset owners are going to be winners and savers will be losers moving forward. You may not like it, but it doesn't make it untrue. This bull market is not even close to over either. Mike Zaccardi writes that the average bull market lasts 70 months, 70. We're only about to complete month 35 of this one. Well, that's a narrative violation, right? And I know your pessimist neighbor, they ain't going to tell you that data, but data is data. And almost all of that points to the fact that we are in a bull market that has plenty of legs left. This brings us to the Federal Reserve meeting this week, and that should culminate in an interest rate cut. Yes, they are going to cut rates with the stock market at all-time highs and the government inflation data measuring above 2.9%. We have never seen this situation before. Creative Planning's Charlie Blello points out that the last time the Fed cut interest rates with inflation over 2.9%, well, that was back in October of 2008, and it was in the midst of the worst recession and bear market since the Great Depression. Now, I personally have two big conclusions from this unprecedented move. First, the Fed is going to do this because of the labor market. Artificial intelligence has been a massive deflationary force in the U.S. economy. Companies are figuring out how to be more productive and more profitable, but to do it with fewer employees. It's good for business. But second, the Federal Reserve has been behind the curve for months. I don't know what these people are doing. I believe the Fed should make a 50 to 75 basis point cut in interest rates, and that would allow them to catch up to where they should be. But history tells us that the Fed is going to avoid being bold in their decision. But don't take my word for it. Jordy Visser explained to me this weekend why he sees the odds of a 50 basis point cut increasing. Take a listen.
For me, this was the dividing line where I think this week between Oracle happening and the CPI being out of the way now, so the Fed's going to cut rates, I think all of the bearish sentiment that's been sitting out there where people refuse to stop with the tariffs, because that's what the CPI is. I'm worried that tariffs are still going to show up somewhere. I think this was the official ending of tariffs this week.
All right. So you say it's the official ending of tariff, like fear mongering. I saw a lot of people saying, oh, inflation is now 2.9% year over year. The tariffs are here. They're infiltrating into the inflation numbers. Look at, and they would go and they would find some data point. They'd be like, I told you the tariffs are inflationary. Look at this thing here. And by the way, these aren't like trolls on the internet. These are like well-respected economists and actually people that like we talk to on a weekly or every other week basis. I'm shocked at how many people are like, hey, inflation is here. Inflation is being driven by the tariffs, and we should all be concerned.
So here's the beauty of those economists. Their job, if they're at Goldman Sachs, Morgan Stanley, is to try and help investors make money. None of that is going to help investors make money. If anything, it's helping them lose money or underachieving. It is the reason why I spend all of the time that I do on AI. It's the reason that you and I basically got together because I believe AI is the gateway to crypto. Economists don't know anything about AI or crypto. Nothing. So what happened in Oracle, I mean, just to put this in economist terms, which no one put out this week, Oracle had an increase in orders of $317 billion. Okay.
Is that a lot?
That's a lot. To put it into context of economist terms, nominal GDP in the US is, let's say, 4.5%. At 4.5% on a $30 trillion economy, you're talking about, let's say, $325 billion a quarter increase. So Oracle in 3 months, their back orders grew by $300 billion. So what's more important right now than what's happening with artificial intelligence? And that's just the infrastructure side. That doesn't include the profit margin side. It doesn't include the adoption side. It doesn't include any of the other things that are going on. This is literally one of the largest companies in the world saying, we don't have enough capacity for the orders that are hitting us. Economists don't talk about that. They're still fixated on whether core goods services moved up. And I'm not kidding you. It gets rounded to where the big, let's say scary part today was, well, it came out at 0.346. If it had come in at 0.351, we would have rounded it up to 0.4. That's the stupidity that gets in for people thinking that is going to help you make money or not.
I think Jordy's got a point there. But let's just level set for a second. Polymarket odds are only 8% for a 50 basis point cut. That's very low compared to the 90% odds for a 25 basis point cut this week. But it's not ultimately going to matter. It doesn't matter whether they do 25, 50, or 75 basis points cut. Carson Group's Ryan Dietrich writes, the Fed's last cut was in December of 2024.
There you go.
9 months between cuts. Waiting 5 to 12 months between cuts tends to be bullish for the S&P 500.
And we shot
higher
up
a year later, 10 out of 11 times with above average returns, and that should have the bulls smiling. The Fed is going to push asset prices from stocks to gold to Bitcoin to much higher levels. They can't help themselves.
Ooh.
They have to address the labor market issues, or they are going to have a much bigger problem on their hands. Put aside the fact that the government's data misled the Fed into believing inflation was much higher than they thought it actually was. Ignore the fact that the Fed has become a politicized organization that seems to be cheering against the current administration's economic plans. And you know what? You should also refrain from getting worked up about the Fed's flip-flopping about being data dependent. The central bank of the United States is now backed into a corner. They have to cut interest rates. Given asset prices are near all-time highs, we can only expect the newfound cheap capital coming into the market to push prices higher and higher in the coming weeks and months.
Ooh.
So, ladies and gentlemen, get your rain boots on. Liquidity is coming, and I think investors are going to be very happy.
Woo. 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 Can I hear them dogs? Can I hear them dogs? Oh, wait. Oh, wait. Now, 37 trillion wiped out with crypto. The reset is happening. It's happening. So if you hold big bags of Dogelon, if you hold big bags of any digital asset that has real utility, hear me out.
Russia has blown the whistle on a U.S. devaluation scheme.
America is trying to change the rules in the gold and cryptocurrency markets. Remember how much debt they have, $35 trillion.
Dropping a global bombshell this week, accusing the U.S. of plotting to erase its $37 trillion debt burden by taking said debt, shoving it into crypto, devaluing it, and then resetting the system with a gold revaluation. A series of moves that wouldn't just impact those using cryptocurrency, but would impact the entire dollar system, meaning your savings, your retirement, your paycheck.
Hold on. If you heard what she said it's not going to impact the crypto users. It's going to impact for those who are with the dollar. It will impact the dollar, family. Again, run that playback right quick, baby.
But would impact the entire dollar system, meaning using cryptocurrency. A series of moves that wouldn't just impact those using cryptocurrency, but would impact the entire dollar system, meaning your savings, your retirement, your paycheck. But the scariest part is that the plan is already in motion. In case you missed it, Anton Kobiakov, a senior advisor to Russian President Vladimir Putin, made a bold claim this week at the Eastern Economic Forum, stating that the United States is preparing to reset the system using crypto and gold to erase its massive debt burden.
Driving everyone where? Into the cryptocurrency cloud. Right now, they have a $35 trillion currency debt. They move it into crypto, into the cloud, devalue it, and start from scratch.
But here's where it gets interesting. Just a few months ago, President Trump signed into law the Genius Act, legislation that creates regulatory framework for stablecoins. Stablecoins being a type of cryptocurrency that maintain a stable value by being pegged to a real-world asset, such as the dollar. But not all is as it appears. On the surface, it was hailed as innovative and the U.S. adopting a new digital world that will keep us competitive. But if you look a little bit closer, there are many who say this is the foundation and legal framework for the United States to use these stablecoins as a lifeline for our debt. None of this even takes into consideration the fact that these stablecoins could also be a Trojan horse for financial control over the American people, taking away our freedom and privacy. But that is a separate video that I've already covered. If you want to watch that, I will link it below. But back to the government scheme. It's no secret that as U.S. debt soars past $37 trillion, the U.S. is facing a buyer's crisis. Foreign central...
You heard, little mama. You heard it. It's about to explode. Humans will occupy Mars. We are about to enter the parabolic phase of the market. This is where most money is made. This is where everything pumps. We get this opportunity once in every 4 years, so don't sell early. Don't get shaken out, and please don't F this up. Your bloodline depends on it. It definitely do. It definitely do. Oh, wait, let me play this right quick, baby. Let me make it a little bit bigger so you guys can see it. Pay attention. Good man. Huh. Huh. Yes, sir. Ooh. Wake up. The European Central Bank Governing Council to decide next steps on a CBDC once the prep phase ends next month. Lagarde. Now listen now, Christine Lagarde is not a female that you want to play with. She got power. She got hella motion. And you guys are probably saying, well, CryptoBrown, everything ties with Dogelon Mars in cryptocurrency. She urges the European governments to rapidly establish the legislative framework for potential introduction of our digital euro.
1 year on from the release of Mario Draghi's report on the future of European competitiveness, it remains essential to follow up on its recommendations with further concrete action and to accelerate implementation in line with the European Commission's roadmap. Governments should prioritize growth-enhancing structural reforms and strategic investment while ensuring sustainable public finance. It is critical to complete the Savings and Investment Union and the Banking Union to an ambitious timetable and to rapidly establish the legislative framework for the potential introduction of our digital euro.
Yeah. Yes, sir. It's happening. Oh, it's happening. Volatile week ahead. September 17th, Fed rate cut decision and Powell's speech. September 18th, U.S. initial jobless claims. September 19th, $4.9 trillion options expire. Rate cut decision. If Powell hints of more rate cuts, alts will explode. If talking about options expire, this could be short-term bearish for stocks and crypto. Shout out to Crypto Diamond Eyes. He says, my prediction is that we will reach number 2, and I am sharing this with the world to highlight that I made this call when we were ranked at 548 on Coin Market Cap. Let's get them up in here.
This chart in 2021 is literally repeating again right now. And this time we're going to go to number 2 in the world on CoinMarketCap for Dogelon Mars.
Craig, did you hear that? Did you hear that, Craig? We're taking over the world. Tom Lee on Bitcoin and Ethereum in Q4 2025. I think they could make a monster move in the next 3 months. And he said, like huge. You know what I'm saying? He didn't say like small, like average, like a little bit, but he says huge.
Bitcoin and Ethereum, I think they could make a monster move in the next 3 months, like huge.
If we were to say Ethereum, Bitcoin, we try to bucket them into risk-averse assets or risk-on type assets.
Yeah.
Is it fair to look at them that way? We used to compare them correlation-wise to the NASDAQ 100. Is that the fair assessment for how these things trade in the coming months?
Yes. Bitcoin is particularly monetary policy liquidity sensitive. Ethereum has elements of being sensitive to liquidity, but it's also part of this AI moving onto the blockchain and Wall Street moving onto the blockchain and that whole stablecoin ChatGPT moment for crypto. So Ethereum, I think, trades almost like 1971 Wall Street, which was the dollar went off the gold standard, a lot of innovation. Ethereum essentially is a growth protocol, and that's why Bitmine is so aggressively acquiring Ethereum.
Ooh. We have seen this before. Altseason is coming. As you see here, this was in 2017, and we're going much higher in 2025. Let's make it make sense. Altseason patterns from 2017 versus 2025 showing some similar setup conditions, but past performance doesn't guarantee future results. AAA has collectors who have been paying premium for these sequences consistently regardless of the market cycles. Cultural demand operates on different timelines than alt-season rotations. It's there before, during, and after these patterns. Position based on conviction rather than hoping history repeats. Exactly. French news says the currency is completely losing value and that the future is Bitcoin. So you might as well accumulate as much Bitcoin as possible. The internet is the United States of America, undoubtedly to devalue the dollar. Man, look, everything I say here is facts. Everything. You know, it's only if you're with us or you're not with us.
It's dumb.
So, no stopping this train. DeFi is the hub of financial innovation. Capital markets represent hundreds of trillions in value.
Actions for the capital market. Expanding into the capital markets is really the next stage, I think, of the Chainlink communities and the Chainlink protocols and the Chainlink standards growth trajectory. It's the ability to define transactions for the capital markets in a technical way that allows them to transact both with each other and with the DeFi community. At the end of the day, the DeFi community will be the hotbed of innovation, where there will be lots of permissionlessly created, permissionlessly innovated, new forms of yield, new financial products, new methods of managing risk. And this will be where the world's financial innovation comes from. There will continue to be a very large capital markets community of asset managers, banks, financial market infrastructures that are regulated in ways that make institutions and the largest users of the financial system comfortable in giving their money over to the system. Eventually, what we're going to see is the highly regulated institutions and DeFi community merge into a single internet of contracts.
Are you ready? Are you prepared? Yeah.
Miss me with that fuck shit, man. We all about paper over here.
You know, it's gone. And family, love y'all. Let's run it.
That shit might go over nigga head if you ain't paying attention. A lot of niggas don't even know what DeFi is.
If you wanna talk to me, pay me in crypto DeFi shit. Fuck all the banks if you ask me alone. Come and see me. Fuck the government, I'm decentralized bitch. Won't tax me, I ain't paying that shit. Fuck what you talking about, bitch, I'm legit. Want universal basic income, not me. Who you think you playing with, bitch, not me. Fuck centralized, that's government money. Fuck your eyes, they ain't spying on me. I'm my own boss, most high got me. I'm my own boss, most high got me. I'ma shoot the 3 like CP3. Great transformation, what do you feel me? Global reset, put the switch on me. XRP, gon' set a nigga free. Trust wallet game, I don't need no safe. Rolls Royce ride when I pick up babe. 13 M's, I'ma drop it on the house. Another 5 M's on the Lamborghini boat. 15 M's, ain't shit to me. Cryptocurrency, set a nigga free. If you feel like I feel, dog, that's real. Blockchain shit, just switched up the game. Fuck $100 bill, dog, that's lame. I don't want fiat, nigga, that's pain. In a couple days, that bit gon' crash. All the markets too, that's y'all last. The wrong pause.